welcome to the special edition of the FI View at Singapore. I'm right here in the financial capital of Asia, as many believe it to be, to get a quick sense on what foreign investors are expecting from the upcoming budget on Monday. Of course, it's going to be a much-awaited event, and there's a lot of focus on what the government would say or do this time around. I have with me two foreign investors, two offshore fund managers who've been investing in India for more than 20 years. Shiv Puri, who's from TVF Capital Advisors, and Sandeep Dhingra from Ashiana Capital. Gentlemen, thanks very much for taking out the time to come here and join me on this very hot afternoon in Singapore. And the burning subject is the budget. Well, I mean, start off with your expectations.
It's that's a very general question, to be honest. But
so from the market's point of view,
I think the markets, we have two issues to address in the market. I like to keep things simple. One is the banks. What happens to the Indian banks? When do they become investable? Right? And what the budget should hopefully help us is, is the government behind the banks? Is the capitalization enough? Is there any strategic thinking behind the way they'll recapitalize the banks? Bank holding company or bank mergers or what have you. I mean, some sort of direction on the banks is important for the market. The second issue in the market is really lack of earnings and lack of growth. And, when you talk about earnings, it's divided into two parts. There's capex and there's consumption. On the capex side, the private sector has really not been investing, as we all know. So, I mean, can we do something to get this moving? Can we see more than just statements saying, okay, X, Y, Z crores for this sector and, this much for the other sector, and some more tangible action. Okay. On the consumption side, of course, there's a lot of talk about, the pay commission and other things. Right. The rural India is under stress. So sure. How do we address that issue? So I think these are the three key issues which we would look forward to seeing some resolution in the budget.
Okay, what about you, Shiv? What is it that you're expecting more market standpoint?
Yeah, I think I'd echo the similar sort of views. On the first issue, on the banking side, I think it's going to require a little more than just the government saying we're going to infuse X billion into the state-run banks. I think there's situations now where they're going to have to come up with a little bit more of a systematic plan as to how these institutions are going to be run. What is the role of private investors in some of these banks going forward? So I think now the stage is reached for them to come up with something a little more comprehensive on that front. On the second aspect I'd say it is still important for them to sort of keep fiscal discipline. However, I think the debate on whether it's 3.5 or 3.9 should not be the material subject. It should be on what is that extra money being spent for. Is it being spent for capital expenditure, or is it being spent for rural development? I think those things are important rather than if it's just an expense overrun. And I think the third thing is really on the reform side. I mean, what is the outlook over there? Are we going to see something happen on the GST front? Because like Sandeep said, I mean, this is a balance sheet recession. The private sector is not investing. Capital expenditure is not happening.
But that's not an India-centric problem. While we're here in Singapore and both of you look at India in the context of Asia, we have seen a lot of countries come under the burden of a widening fiscal deficit. Governments are spending world over. It's not a local problem that private investment is lacking.
Well, that's true. That is definitely true. But, in that case, as Shiv pointed out, it's not about...
My point is that, do you think that a relaxation in the fiscal deficit number should be scrutinized that severely when, you're in an environment where you would want to push growth because clearly that's the focus area. That's your only relative strength to other Asian markets.
No, I don't think, from my perspective, I don't think that number is important. Whether it's, as Shiv said, whether it's 3.5 or 3.7 or 3.8, it doesn't matter, as long as money is being well spent.
So the finance minister comes and says, 3.7.
I don't think markets will go to 3.5.
Well, I think the issue we have right now is that the markets or the economy is not willing to give the government the benefit of the doubt. 2 years ago, it would not have mattered as much. But this year, the benefit of the doubt will have to be seen into what the outcome is. But having said that, I still think that, that incremental difference won't matter. What will matter is how they spend it and whether that people believe that's going to result in incremental growth or not.
Do you think that this is really the time when the government can stress more on delivery than just making the budget a statement of intent? Because in the first year, you would always give the budget the benefit of the government, rather, the benefit of doubt that they're still kind of finding their feet and setting up shop. But in the second year, you would want perhaps more concrete signs of the direction that they're going.
I mean, I think the budget is always just a statement of intent. The delivery will have to come in the year to follow. But I think if the blueprint at least is something that we, that is credible and that is a little more far-reaching and aggressive, I think that's what the market right now requires.
Okay. Long-term capital gains tax, has that got you guys discussing over what should happen with investing in India over the long term or more than 1 year?
Yeah, I mean, that is an issue. I mean, that's, we view it as an uncalled for, creating new problems when we already have a whole set of problems to solve. And coming back to your point, I think what we'd like to see and what I think foreign investors would be happy to see is some out-of-the-box thinking in the budget, not just the same thing about talking about the statement, saying, okay,
what is out of the box?
We realize the problems are, for example, as Shiv said, the banks, for example. Just another dose of 20,000, 30,000, 40,000 crores of capital allocation is not the solution. We need to do more. We need to change the way these banks are run, maybe have a bank holding company, maybe have a multi-year capitalization plan, maybe set targets for them at what target.
Do you think the measures taken thus far have not... actually, they've called for much debate because it's like higher accounting for bad loans in just one go, right? And that's impacted the earnings of a lot of the banks. And many believe that, the focus area should be where the defaults are coming in, which is infrastructure, commodities, the weaker sectors. And, trying to push for improving their cash flows and their serviceability on loans. Is that the way you look at it as well? Or you think that no, get the problem, cut your losses and get out if the losses are running deep?
No, I think what's happening with the PSU banks is absolutely the right thing, because without these banks having a clean balance sheet, lending growth cannot pick up. And we've seen that over the last few years. And in fact, I think these problems have been happening, coming from 2010. And banks have been rolling all of this stuff. And, finally now that the regulators force them to recognize it, I think it's a good thing. The only concern, of course, is that, it's happening a little too suddenly. And, banks don't have the capital, therefore, to even finance the current sort of credit requirement. So that, if without credit flow, the economic growth is going to get impacted. There's no doubt about that.
Yeah, but, you spoke about credit growth coming back. We haven't really seen signs of it as yet. You're looking at credit growth roughly at about 11%. And in FY12, 4 years back, the growth was at about 19%. So there's been a marked slowdown there. What can really change or bring about a pickup in the way disbursements go from here?
No, it comes back to the first point, right? The private sector is not investing. We know that. And, and they're not going to be in a position to invest for some time till they clean up their balance sheets. So that's where out-of-the-box thinking needs to come in, right? The government has to step in. Now they need to step in different ways. Just allocating more money to, say, the roads and different sectors is not going to be the solution. You need to do something more. You need to probably set up, I don't know, maybe a national infrastructure fund where you can get some sovereign funding and use that to, catalyze projects and, maybe channelize retail money into that, through bonds or tax-free bonds or something. I mean, I'm just giving you random thoughts, but the idea is something different has to be done. It's not the same old medicine, it's not going to work. See, think about it from investors' point of view, right? People sitting in different parts of the world, everybody has believed about the India story, but you go to conferences today, everyone says the same thing. Oh, there's no earnings growth, it's not happening, it's slow, we don't know, now's not the time. You've got to give them a reason to come back. You've got to give them a reason to really look at India again. Otherwise, you've been seeing the daily FI outflows, and that's not going to stop unless you give people a reason to, stop selling and start
Do you think
buying.
the market has priced in a lot of that earnings slowdown, or is there more to go?
I think by and large, from these levels, depending on a time horizon, the market has priced a lot in. You've had the commodity sector that has completely cratered. You've had the banking sector that's taken a huge hit. You've had a lot of different sectors that have corrected. I think the consensus is that there is no earnings growth, that there are a lot of problems in the economy. So I think the issue is less to do with what sort of significant downside there will be other than the mark-to-market movements, but more on where is the direction, and what's it going to look like in a couple of years.
Where is the direction?
So I think that's what depends on what the government lays out in a few days from now, and then how it executes on it. I think that's pretty much going to decide the direction. There are a lot of good things that have happened also, in the last couple of years, and we shouldn't forget that. One is that you see that the government, at least at the highest level, you hear about corruption having come down a lot. You are hearing about resources now being allocated very fairly. You're seeing the coal production numbers being up significantly. You're seeing some reforms happen on the power side, which will again help the power industry. I mean, the plant load factor right now in India is 62%.
Yeah.
I mean, of course, the state electricity boards are losing money, but all of these things will help power generation go up and get them back in order. You're seeing some activity happen on the road side. There has been a pickup over there. So there are things that are also happening on the positive side. But like Sandeep was also saying earlier, the critical thing is to get the private sector to start investing, and their balance sheet does not allow them to do that. So even if the government comes up with certain things, today they must realize that there is a balance sheet recession, and balance sheet recessions don't end very quickly. They do take their time. There is a state-run banking balance sheet problem. They might get past that by infusing capital, but getting the private developers to delever is something that is going to take time.
GST, bankruptcy code, the land bill. While a lot is awaited from the budget in terms of, like you said, the statement of intent and the direction of delivery, do you think that there's been disappointment on that front because we are back to the pre-Modi era in terms of market levels?
Yeah, I think on the reforms that you mentioned, those are the three critical ones. I think the land reform has still been circumvented in some ways because now it's become a lot more of a state issue. So you've seen certain states that have announced, land reforms, especially Rajasthan, and those are now not being contested by the centre. On GST, that is something that is, it's obviously a political issue. There's no economic argument against it. So yes.
But are you disappointed that it's taken this long?
I think everybody is. I don't think it's only just investors or anyone else. Everybody is disappointed it hasn't happened.
Absolutely. Yeah. No. I think it's disappointing. I think it's important for them to show a few banner reforms that things are moving ahead. People appreciate these things take time to, flow through into numbers and into growth, so to speak. But it's a statement of intent and it's a direction which matters.
Would the GST clearance have brought about more money into India, do you think?
Absolutely, without a doubt.
So that's holding back.
Yeah, it's such an easy sort of growth that you can add to the current number because it's real, and I think it also conveys intent translating into execution, which would have given the confidence. So yes, absolutely would have been beneficial.
What about generally the markets? Now we've spoken about what this budget would mean in terms of the direction of the economy and its influence on the markets, but the markets have come off, like I said, pre-Modi era, and we are pretty much trading at 14 times 1 year forward earnings. Historically, as I was just discussing with Sandeep, that the buy range for India is about 12 times to 14 times. So do you think that this is becoming a compelling point to buy India, especially for incremental allocations?
Yeah, I'd say that absolutely. But the important thing to realize there is to look at where operating margins are, because operating margins in a business cycle, in an economy, always mean revert. Mm-hmm. And today you see operating margins at about 30% below their long-term average. Mm-hmm. If you recall, in 2007, operating margins for corporate India were about 25% higher than their long-term average, and the multiple had gone up to 25 times forward earnings. So now your environment...
But there's a reason for that, right? I mean, most of the operating margin expansion that's come by has really been about managing costs, and because a lot of commodity prices have gone down, so it's not so much, operating margins are not really benefiting so much from revenue expansion. Revenues have remained flat.
Yeah, I'd say most of the operating margin benefit hasn't even come in yet. Because a lot of it is the utilization levels are low. And so as you point out, revenue, the top line has to start coming back. Also, the benefits of lower commodity prices have, I don't think the full benefit has hit most manufacturing companies in India. So, for me, if I look at it, that is the cushion. There's a buffer even in the multiple, because cyclically adjusted earnings are, maybe 25 or 30% lower than where they have been.
For fund managers, isn't this market about relative returns and more than just a solo country and its absolute performance? Because I mean, if you look at growth, there is growth in India, which is clearly lagging in other markets. It's the fastest growing economy as far as the World Bank.
Yeah, I mean, look, China's been a fast-growing market. It's not been easy to make money there in the last 8-10 years. So economic growth and market returns
But
are
it's not that accessible as well. So it has issues of its own.
Yeah, I mean, not that correlated. But if I look at recently how different markets are trading, one of the areas which we were less excited about last year, like ASEAN markets, they are beginning to do much better. And like Indonesia had this whole issue about can Jokowi deliver or not deliver, like the Modi kind of premium, and it disappointed for a year, but it's coming back.
Export growth, and with a resilient currency, some believe that we are losing out on market share in global trade. Do you think that could be a filler? Because if you look at overall growth, that's coming in about 7.5%, but the earnings growth has majorly lagged and underperformed, like we discussed. So do you think that could be part of the solution?
I think exports is going to be challenging for all countries, not only just India. You're sort of seeing the global trade, which had been growing for so many years, now start to go the other way, and I don't think that trend's fully done. So I think most foreign investors would look at India as less of an export story. They wouldn't really look at thinking about investing based on India becoming a manufacturing hub and exporting things for the world. It's largely a domestic economy. It still derives a lot of its growth from the domestic economy, and I think that's how it should position itself.
So how do they look at the Make in India campaign then?
I think it's a fantastic idea, but because longer term, India needs to become a manufacturing hub, because the large population, you have to employ people, and that's the way to go. But implementation is, it's too early to tell whether implementation is right or wrong.
In India, IT, pharma, consumer names, continue to do well because that's where there's certainty of growth. Infrastructure, commodities, for very obvious reasons, have lagged. As fund managers, how have you managed your India portfolios thus far?
No, I'd say, there are certain areas that continue to do well even in the current growth environment. So, one of them would be the financial services firms, but the private sector firms, whether it's in the private sector banks, whether it's the rural housing companies. I think there are certain themes that are pretty secular in their growth in India, regardless of where the growth's going to come out, and that still continues. I think, like you said, pharma is a very interesting area. It's been an interesting area for a while, and I don't think that these companies are done. I think the opportunity that they're addressing is fairly large. So there are certain areas that are still quite interesting. I think there are areas like consumables within the capital goods space is a very interesting area, because these are great businesses, usually dominated by.
But is the time to buy cyclicals now? If you are hoping for a recovery in the earnings cycle 6 months down the line, we've been hearing it for actually the last 1.5 years. But if 6 months down the line we can actually pull through an earnings revival, is it a good time to look at infrastructure now?
I think it's very much on a bottoms-up basis. Infrastructure is a very broad term, and there are some very terrible businesses that exist within infrastructure. But there's also some high-quality businesses. So it's a very bottoms-up sort of.
Which ones do you like?
No, so without going into names, but
sure.
If you look at companies that, for example, that make bearings or abrasives or things like that. These are very consolidated sort of suppliers in India. There are one or two or three people that pretty much dominate the organized sector. Their product is used even in daily, sort of running of a plant, rather than only when capex picks up in a material way. So things like that could be interesting. But otherwise, broad infrastructure, we're not seeing anything in the next 6 months that's going to show any sort of turn.
Change that? You echo the same way?
Yeah, absolutely. I think we're all hiding in the same places.
Okay.
Private sector, non-bank financials, so to speak. A little bit of IT, a little bit of pharma.
Private bank showed some pain this time. You're not worried?
Yes, I'm absolutely worried. That's why I said non-bank financials.
Private banks, Shiv?
So,
Thought it was a bit of a question mark.
Well, no, I think the numbers were absolutely fine. It's recent volatility in the market that the stocks have corrected, but that's fine. I think we have to look at private banks in the context that they just have a tremendous amount of market share more to gain. The state-run banks are 70% still of credit. And I think if you look out over the next few years, the private sector banks are going to take market share and accelerate its pace. So despite credit growth being in the 10, 11, 12%, they will still grow their loan book in the high teens or 20%. And I think several of the private sector banks, not all, but several of them are, run by really smart entrepreneurs who understand risk and credit underwriting. And so it's important to be associated with them.
All right, Sandeep and Shiv, as we wrap up this discussion, the one aspect that you'd be watching out, I mean, drilling it down to a very specific announcement in the budget that would make or change your sentiment negatively on India.
Recapitalization of the state-run financial sector.
What about you?
I want one out-of-the-box thinking statement. Like the railway budget had one statement which was interesting, where the minister said, we cannot raise freight rates because we'll compete ourselves out. We need one big, out-of-the-box thinking, preferably the bank recapitalization and having a plan around that. Or just the whole government spending machinery. I mean, is there a different way to just catalyze the whole investment side of the economy?
And do you think that once the budget event is out of the way, the markets would rally, stage a bit of a rebound, or
Depends on what you see in the budget.
do you think that is how much is riding on the budget?
I think so. I really think so.
Perception can meaningfully change?
Absolutely. Look, if the budgets, if generally we get nothing out of it, which I'm hoping we won't, market could have a lot more downside.
How much more?
I don't know. I mean, look, it's hard to put numbers to it, but 6,000, 6,500, I don't know.
Do you also concur with that view, Shiv?
I think expectations are so low that, and I don't have any view on the short-term movement in the market,
Sure.
but I think the expectations are pretty low. So I find it hard to see very significant downside from these levels.
But, just as a last question, you think that this budget is going to be a lot more keenly watched, even though there is not that much noise around it as there was around budget last year. But even so, there's going to be much focus on what really comes out to, like I said, make or mar sentiment.
I completely agree. I think this is a very important budget, and the first budget was done very, very quickly. There wasn't enough time. Obviously, the new government took over. The second budget, was had a little bit of little better than the first, but this is a very important one.
Yeah, I absolutely agree. I mean, to Shiv's point, I think expectations are low, so the government has a low hurdle to climb. But and let's hope we get something good out of it.
Okay, on that hope, thanks very much, Sandeep, as well as Shiv, for taking out the time to speak with us today. With that, we come to the end of this edition of the FII View from Singapore. We'll catch you with another panel talking about market expectations from the budget on Monday.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.